On behalf of Equirus Securities, I would like to welcome the management of V-Guard Industries to discuss 2Q FY21 results. We have with us the senior management of V-Guard Industries, represented by Mr. Mithun, Managing Director, Mr. Ramchandran, Director and Chief Operating Officer, and Mr. Sudarshan Kasturi, Senior VP and Chief Financial Officer. I would now hand over the call to the management for the comments. Thank you, and over to you, sir.
Thank you. A very warm welcome to everyone present, and thank you very much for joining us today to discuss the operating and financial performance of our company for the second quarter ended 30th September 2020. During Q2 FY21, V-Guard recorded revenues of 616.7 crore, which is flat compared to the corresponding quarter of last year. This also represents a sharp rebound from the substantial weakness seen in Q1 caused by the spread of the virus pandemic. South revenues declined by 3.2% YOY, mostly due to the resurgence of cases in Kerala. Revenues from non-South market expanded 4.4% and represented 39% of total revenues, compared with 37% of total revenues as on Q2 last year. The northern and western markets delivered encouraging performance, whereas eastern markets were impacted by lockdowns in West Bengal and Bihar. Within our three product segments, electronics and electricals both grew at 2%, whereas there was a decline in revenues from consumer durables. Products such as fans, pumps, digital UPS registered good growth, but water heaters declined due to huge supply chain disruptions. Our water heater plant went through prolonged closure due to lockdown in Sikkim, which resulted in lost revenues of close to 30 crores for the quarter. During the quarter, we launched a range of new products like water purifiers, breakfast appliances, kitchen hobs and chimneys through online channels. The initial response is very encouraging, and we will extend these to offline channels at an appropriate time in the future. Online revenues, although small proportion of the total business, grew rapidly by 40% YOY. This is a trend we expect to be maintained over the next few years as e-commerce becomes more mainstream to consumer behavior based on wider data accessibility and usage across the country. Gross margins for the quarter were lower by 220 basis points, largely due to the product mix and underutilization of the Sikkim plant. In the prevailing situation of uncertainty, we slowed down our advertisement and promotion spend, which was about 0.5% of revenues compared with 1.7% of revenues in the corresponding quarter of last year. We also kept tight control on other operating costs. EBITDA margins were 12% compared with 12.5% in the corresponding quarter of last year. Here, I want to highlight that in Q2 of last year, we had a one-off write-back of ESOP provisions to the extent of 10.2 crore. The corresponding write-back for Q2 this year is only 2.6 crore. The net of this adjustment, EBITDA for Q2 FY21 would be higher on a YOY basis. PBT during the quarter was at 71.2 crore, was lower by 7.2% due to the higher effective tax rate of 29.7%. The decline in PAT has been more. The ETR for the first half is higher due to lower profit contribution from our Sikkim units. The ETR is expected to normalize on a full year basis. During Q2, our working capital position has improved to 53 days. Debtor position improved sharply to 31 days as we sustain working capital discipline across our distribution channels. Low working capital has led to substantial cash flows from operations that stood at 325 crore for the first half of the year compared to 150 crores in the first half of last financial year. Our net cash position was in excess of 450 crore as on 30th September 2020. With supply chain related issues largely resolved and onset of the festive season, we now expect to get back onto the growth path during the coming quarter and through the rest of the year. Based on our brand position, strong consumer proposition, best-in-class systems and process and learnings for the last few months, we believe V-Guard is more future-proof organization with a resilient growth framework in place. On that note, I would like to thank you once again for your participation and would like to hand over the floor to the moderator for the Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. First question is from the line of Santosh Yelapu from Ashika Stock Broking. Please go ahead.
Sir, congrats on a good set of numbers. Sir, I had 3 questions. First question, sir, could you throw some color on what could be the reason for this drastic improvement, I should say, on the data days that we are seeing in the quarters 1? Second thing, sir, within the consumer durables, electronics and electronic subsidies, which have been the product categories which have grown at the higher rate than the reported segment numbers for H1? And lastly, if you could throw some color on the performance of the southern states during the quarter, and what do you see now happening as we move into the third quarter as of now, sir?
See, regarding data days, there are 2 reasons. One is, when we went into this lockdown, the beginning of lockdown in April, we took a call to, focus on collections rather than, trying to push sales. So that has been one of the reasons why debtor position has been improved. The second reason is, like we mentioned earlier, there are some categories where our supply is yet to get streamlined. For example, we have mentioned that water heaters, we have lost some sales because we have not been able to supply. There has been supply disruption in certain other categories as well. So the inventory that is being carried by the trade is also less than desirable, which has also led to the decrease in working capital. So these are the 2 reasons. In consumer durable segment, the fan business has grown well. The water heater business, of course, has done very badly because of supply disruption. We also had introductions of breakfast appliances in e-commerce channel, which has also done well. So I think it's been largely driven by the fan sector. Whereas the other segment like water heater, which is the other large segment, has not performed well.
And lastly, the South Indian markets performance, sir?
Okay, in South, primarily our sales have been impacted in the Kerala region because we have had a huge increase in cases in the last 40 days or so. We also are having some challenges in the southern part of Tamil Nadu, that is Madurai region. Again, there also sales has been slow because I think there has been more cases, in that area. So when these are the 2 areas within South India that has done poorly. Barring that, actually Karnataka and erstwhile Andhra Pradesh has done well in Q2.
That's it, sir. Thank you.
Thank you.
Thank you very much. Next question is from the line of Renu Baid from India Infoline. Please go ahead.
Yeah, hi, good afternoon, sir. Few questions from my end. So first would be just trying to understand a bit more on the new launches which you have announced this quarter. If you can throw some insights in terms of what are the 3 to 5 year plans for these categories, targeted revenue growth, sourcing strategy across all these ranges. And given that some of these categories are very much different from our existing categories, how are we investing in the channels for the market for these and the kind of investments that you plan in these categories over the next few years? That's my first question.
Ram, you want to take this?
Sorry, I missed the later part of the sentence. If you can repeat, please.
Yeah. So my question
I had
is
a signal
to
drop.
understand a bit more about the new launches that you have announced this quarter. The product categories are slightly different, be it water purifiers or the kitchen hobs chimneys.
Yeah.
So, what are the revenue targets that you have from these categories or market share targets in these categories over a medium-term perspective? The sourcing strategies for these product ranges. And what would be the investment in channel required, given that they are different compared to the rest of the electrical market in which you're present?
So, fundamentally, we already have a kitchen portfolio. So we have, induction cooktop, mixer grinder, gas stoves, So we have already incubated these categories over the last 3 to 4 years, And our extension into kitchen appliances, small kitchen appliances and hoods and hobs was completing this exercise, so that we have a more comprehensive kitchen portfolio. That's, the first part. We will be focusing initially with these newer categories that we have launched first on e-commerce, and then, we will move into organized retail before we move into wider distribution. So as with time, we will have, a wider range of offering and, better product capability and, category understanding, right? And therefore we'll have ability to, service a wider network. In these categories already e-commerce and organized retail together should be about 35 to 40% of the business at least a couple of years from now. So we will be in the initial phase of our what I would say portfolio development. We will be focusing on this segment. Now we are generally what I would say. In the early phase, our focus is on, building our capability and understanding on the supply side and on the, establishing product capability and getting the, our offerings right, in terms of consumer value proposition and, trade value proposition. So that's our initial focus for the first 2 to 3 years. Coming to water purifier. So I think in case of water purifier again, initially, also in the COVID context, we have started with e-com. Here again, e-com plus organized retail, will be about 30 to 40% of the market a couple of years from now. So I think that, with, a narrow focus in terms of, addressable universe of retailers, we will be able to cover a wider portfolio of, the consumer opportunity. Now here, I think in the case of water purifier, we are building a dedicated service network, which is going to be company owned, unlike our rest of our portfolio, which is going to be franchisee owned. So we are setting up a direct service center in major cities across the country. So that's the investment that we are making, for this category to be able to build. Now the supply chain is, initially, as we have always done, we get into a category, with, an outsource, OEM, structure. And progressively, we start to build and own product design and molds and, so that, we are able to own the product and the platform. So I think that's how we will go. And when we reach some reasonable scale, I think, we will, and, we have built sufficient expertise and understanding. We usually move to building our own manufacturing capability. So this is the approach we have followed and we are following across different categories.
So the next two questions essentially are to understand, given that you mentioned that broadly business is now back to pre-COVID levels. So initially we were very skeptical on the festive offtake during Diwali, etc. So now after the supply chain hiccups are in place, we think we should be now back to double-digit growth for the rest of the year. And what could be the kind of pricing action required to offset the increase in commodity prices? That's it from my side.
Okay. So two parts of the question. I think we should have had decent single-digit growth last quarter. If supply had been decent, right? But I think the changes. So I think two factors have to change. I think our supply scenario has to strengthen as we go forward, and which we believe should happen compared to where we were last quarter. And the other thing is so Kerala, which has been in extended phase of slowdown in the last quarter because of COVID picking up in the last 45 to 50 days. Yeah. So I think we believe that these two factors will ease, and we believe that coming quarter we certainly should be able to do double-digit growth. Yeah, I mean that's what we are expecting. Quarter 4 anyway, I think the base is weaker because it has only 20 days of sales in March. So I think double-digit growth for the second half should be possible unless there are significant what I would say, interventions on the COVID side, yeah? Either on market side or supply side. Yeah? Supply side interventions are challenging because, if it takes out the manufacturing infrastructure for an extended period of time, like what happened with water for us. But then, you are really stuck with not being able to service the market. Yeah? On the other hand, if market side disruptions are there, some states go down, some other states, can address, and which is why, we could still have a flat growth in spite of a poor supply situation and, challenges in our biggest market, Kerala.
Right. And so the last, on the pricing action required in the third quarter for increase in commodity costs. Is it required or you will be able to absorb it?
Input prices have gone up and, we are watching it closely and, we will be attempting to transmit some of these input cost increases, over the next 2 to 3 months.
Thank you very much. Next question is from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the opportunity. So my first question is, how much does Kerala contribute to our overall sales right now, and when do we foresee the revival in the current situation in terms of demand?
Kerala is about, I think, 20% of revenue. Ram, am I correct?
Yes, Nitin. Yes, 20 is correct.
Slightly less than 20% of our revenue. Sorry, what is the second part of the question?
So when do we foresee the revival in terms of demand in such a key market for us?
So I think here, everywhere, one issue in Kerala is, people are very well aware about the news and, everyone reads the newspapers and stuff like that. So the level of fear is very high here. And that kind of plays out in, with lack of footfalls and stuff like that. I think as like other states, after some time people probably will get used to it, because we hardly had any cases in the beginning of this, issue. And when other states, the cases started reducing is when our, cases started going up over here. So I think as that normalizes and people start developing some, confidence, they will start stepping out and buying again. So I think in Q3 it should be better.
Q3, fair enough. So my second question is on the festive season. What are the kind of initial trends we are seeing in the festive season, considering that we are also trusting on appliances? So, in terms of pricing or demand or the inventory levels currently.
See, festival season, so we finished Onam, and then now we are, we finished some of the festival, periods of the e-commerce players. So the festival season of Onam, we could see there was decent demand for television. So it's very need-based. We have not so far seen any, down trading and all by customers, so our sales mix pretty much remains where it was. Yes, maybe some of the products where where it's very highly priced, super premium products, they may not be selling much, but their sales are a very small part of our overall sales in which way. For example, we launched a new range of fans from our new fan factory in Roorkee, and that is actually about 25% more than our, existing range, and we have a backlog of about 3 to 5 months for that product. So I think, I don't think there is any down trading as such. It's just, every consumer segment is buying. I don't think there is any heavy down trading. We have not felt it any which way, from the market side.
Understand. And how was the response in the initial days of e-commerce sales, sir?
So e-commerce is an initiative we started about 3 years back, and we are having good relationship with both the large e-commerce players. We have a annual business plan that we manage, with both of them. And it's been extremely good. Now, our only issue has been that some of these new categories like breakfast appliances, our supply chain is from China, so that has got impacted a little bit and we were not able to supply to the demand. But the initial feedback is very good. Even for e-commerce, I think products like television sales has been strong. Ram, you want to supplement anything?
I think the festival season broadly, in Kerala has been moderate because of, the COVID issue and the people not stepping out. As we move to the other parts, I think, we will get feedback as we are just getting out of Puja. But I think the offtakes are better. We are seeing, good traction this month. Now, coming to the, e-commerce part, I think, e-commerce performance has been reasonably good, bit short of, what we would have ideally liked to do. But, 80-85% of that gap is contributed by our inability to supply. But, growth over last year is very, very significant.
I understand. So, and in your commentary in the presentation, you mentioned that some of the key vendors suffered production stoppages due to COVID-related reasons and also some supply disruptions in the Sikkim plant. So, are most of these behind us and resolved now?
So, actually what happened is, we started our Sikkim operations late. Yeah? And also, Sikkim was slower to open and there were more controls in Sikkim compared to other parts of the country. So that also partly contributed to a slower opening in Sikkim. And after about 4 weeks of opening, these 4 to 6 weeks of opening, these two factories went into containment zones. So they were out for about a month each. Yeah. And after that, we came back for 3 weeks and, again, the voice of factory, right? So we had, significant COVID issues. About 6 or 7 people were impacted and, connected with them, some 70-80 people were also put on quarantine. So this, large portion of these are the supervisory, staff and the operating leadership of the unit. This should come back. So that's impacted our September significantly and part of, October even as we speak. And, but I think, this should, stabilizer is back to normal from second half of last month. And water heater we expect that, by end of this month, or maybe first week of next month, it should normalize. As, because what happens is, it takes people about 3 to 4 weeks to come back, those who have been COVID impacted. And we try to make sure that, at least, people who are put in quarantine stay away for 3 weeks, before they come back so that, it's safe for others. So that's on the, Sikkim side. And, it's happened that, both these products, both these factories, make seasonal products. So that's, in the case of water heater, it's impacted, our seasonal availability, though we are coming back now. And in the case of stabilizer, it has impacted our television stabilizer, availability, right, which is being made in that factory. Now, as far as vendors are concerned, yes, we have had issues. We have had issues in kitchen. We have had issues in inverters, batteries. We've had issues in fans. So I think, issues have been, wide and across. So I think, so main challenge is, while I think in the other categories, gradually supply is coming back, we are running hand to mouth. And, as you may see from some of the other competitors also, some of the categories, the market, there are gaps in the market and, people are able to, grow in some categories much faster than, what we may have been able to demonstrate. So, not only feeding our plan, but also, feeding the market requirement, which may be higher than plan is a challenge. So today, as we speak, our, inventory with our retailers may be lower than normal inventory that, would be there for trade. And our internal inventory also in many categories is lower, although overall inventory for V-Guard is high, because we have made a call, to carry high inventory as contingency for these kind of issues. But then, in a number of categories, the inventory is not adequate. Still, internal inventory. Yeah.
Understand.
But I think the supply chain is falling in place. Yeah. So I think these were issues. We had expected these issues and anticipated these issues to hit somewhere around middle of last month. That has happened, and therefore we did not talk too much about the disruption, and we just highlighted our challenge with the Sikkim factory because it was a very abnormal situation where for like 6 to 7 weeks the factory was not available to us, right? But otherwise, the other cases are, what I would say, they are, interruptions, but they were expected interruptions because we knew it's going to take time for the supply chain to recover.
Understand. Then my last question is, how do you foresee the demand from real estate? Is it gaining pace? And also your comments on the rural versus urban demand. That's it from my side.
So real estate demand, what we are hearing is it's, because of the reduction in interest rates, there seems to be some uptick in real estate, although we'll have to wait and see. As far as rural and urban, yes, smaller towns are doing better than larger cities. There are some exceptions, like, Bangalore is doing well because pretty much everything is open. So I think in the earlier part of the year, definitely the smaller towns were outstripping the larger cities. The large cities of Delhi and Bombay were especially, and Pune were very badly impacted. But now they also, started to come back to normal.
Understand. Thank you very much.
Thank you very much. Next question is from the line of Chiranjit Singh from DSP Mutual Fund. Please go ahead.
Hello, sir. Hello. Can you hear me?
Yes. Go ahead, sir. You're audible.
Yeah. So just I want to understand on this new product introduction of new categories. So when we are thinking of introducing these products, what's our general thought process in terms of which categories we want to get into, our right to win, plus in terms of the category sizes when you look at within these, either breakfast appliances, because we already have certain categories which we can scale up quite well. And so in terms of the management bandwidth, putting onto these new categories versus existing categories which we want to scale up. So how is that decision being taken, sir, right now?
Ram, you want to take this?
Yeah. So, see, fundamentally, we are looking at, V-Guard as a consumer franchise, yeah, and we are extending into relevant adjacencies, yeah. So let me talk about the two categories, right? So our entry into the kitchen adjacencies is actually, continuing and completing, actions which we had started about 5 to 6 years back, right? We had first gotten with induction cooktop and then launched mixer grinder, and then, we went into rice cookers and gas stoves, and after that, we went into small kitchen appliances and hoods and knobs, yeah, so that we are able to complete the range of kitchen appliances, yeah. And so that's the journey as far as kitchen is concerned. Fundamentally, our thinking is, we want to focus on, India-centric categories where we will have a better right to win. And, kitchen being an India-centric category, with, local supply chain for most of the categories, probably barring, small kitchen appliances, yeah. That is, I think, so that's the context. That's how we thought about it. And, the kitchen market, a significant part of the kitchen market is also south. And, V-Guard has a strong presence in the southern market. It's a well-recognized brand. And, we enjoy, good relationship with the consumers and trade. And, we have the go-to-market infrastructure in these markets. So that was the context of getting into kitchen. That's a decision that, we took about 5-6 years back, and what you are seeing is a progressive culmination of, the introductions to focus on kitchen. Water heater, yes, is a bit different. Water purifier is a bit different from, it's not an immediate kitchen adjacency, but it's certainly, one more category that, we are getting into here. I think to just go back in our history, right? We had launched water purifiers earlier, and we had some experience, and then we pulled out of it because at that point in time, the market in South was not that big and well developed, and at that time we had certain challenges in terms of our the markets that we were selling into and the need for this kind of a product at that time. So water is something that there is familiarity internally around the category. Yes, you are right. There are many horses, and how should we grow our business? Should we grow focusing on few categories or grow broadly? I think the activity in our space, right, is evolving where brands, it's not just us but all brands, right? They are having a more wider portfolio of offering. And that's important, because that also represents, contributes to the stature of the brand, and that's critical, But mostly, we have stuck to products, which are fundamentally going into consumer home, and they are adjacencies. So water purifier is also part of kitchen, and is how we thought about it, and we said that we should make an offering to complete our offering in kitchen.
Okay, so thanks for that explanation. So the other aspect is, in terms of the inventory restocking, how is the trend, if, when the supply side normalizes, so South versus non-South in terms of inventory restocking by dealers, how is that propensity you are seeing for V-Guard specifically? Because in non-South, we would be, competing with some of the very strong local brands. So, whether dealers will prefer more local brands and they're restocking. So, are there any trends to that?
No, you see, fundamentally, sorry, Mithun, I'll take this.
Please.
Yeah. See, fundamentally, we have been, if you look at our CAGR over the last 5 years, just, leave out March quarter of last year, and then, otherwise look at our CAGR or normalize it and look at our CAGR. Well, non-South is growing at about 18-19%, right? And, probably, 2 to 2.5 times, our growth in South, which may be around 7 to 8%, So, so we have been enjoying significant traction, and as we speak, right, we should end the year at with non-South contributing about 40% of our business. And for the kind of product portfolio that we are in today, right, this is, ideally, non-South should be about 62-63% of the market. And where we are is, 2/3 of the journey. Mind you, we've been on this journey now for about 10 years. And so we think that, we have made good progress. And there is another part to this, which is that, number of categories we have, recently launched, like switches, switchgear, kitchen, water purifier. These are some examples that we are talking about. Right? These are not present in all markets, and these are not present in non-South yet in any significant way. Yes, we're selling some switches and switchgear, over the last, just before the lockdown, we had started to roll it out to non-South markets. So what happens is, if you actually look at the core categories, which, this ratio would be more in the region of around 45%. And we believe that, we can grow, 10% faster in non-South every year. And that should add, about 2 to 3%, share. The contribution of non-South should go up by 2 to 3%. 3%. And so we think, over a period of, 4 years, 10 to 12 percentage points, we should be able to move, which will take us to about 50 to 53%. And if you just, at that stage also, if you would be looking at the core categories, they will be at about 56, 57%, maybe 5-6% lower than where it should be ideally. So I think our journey is reasonable and going well. Second thing is, I think, we have strongly rebounded, and, when we have said that, we have had losses, and we talked about the 30 crore loss, right? Fundamentally, we are talking about our plan versus actuals. And as you will see across different categories, depending on different companies' product portfolio, the demand on the market has been even higher than, what companies had planned for in some categories, particularly durables. I think durables as a category has seen far better traction than what manufacturers would have planned or anticipated in this quarter. That's probably got to do with filling the gap. A similar, demand and, does exist for our categories. And in fact, we have been able to, reduce our outstanding in the market from 50 to 55 days to about 30 odd days. Yeah. So, and this all has happened, and simultaneously we are able to keep supplies going. Yeah. And as we speak today, our inventory is far lower, probably, about 10 to 15 days lower than what we would normally have in the market, as a normal course of business. And as also our internal inventories are low, which basically means that, the mix availability, across our different selling points is weak and poor. So I think, yes, you are right, but the market is actually, leaning towards stronger brands. So stronger brands, leading brands, right, who have reach and who have distribution capability, right, they are getting traction. And that's visible also from the fact that, our business in, some of the non-South markets has grown in double digits, like North and West, yeah, where, market is open and, we did not have any lockdown issues, yeah, in spite of lack of availability. So I think, the market is actually favoring, larger players and larger brands who have the ability to reach, yeah. So we have distribution infrastructure across the country. We have 30 plus warehouses across the country, right? And we are like, in a 150 kilometer radius to most major markets in the country. So I think, for us and for players like us, right, the market is more favorable today.
Okay. Great, sir. Thanks a lot for taking my questions. That's all from my side.
Thank you very much. Next question is from the line of Simranjeet Singh from SMC Global. Please go ahead.
Yeah, thank you for giving the opportunity. Sir, I want to ask certain questions. First of all, can you throw some light? Means how much the EBITDA margins you are getting from the non-South market, and what is the trend in the past 3-4 years? Means how that operating profit margins, especially in the non-South market, you are getting right now. And first of all, this question is, and secondly, second question is, what is the percentage of the digital? How much is digital is contributing to your net revenue from operations? What is the percentage of that? And how things are? Third question is how things are shaping up in Kerala post-COVID, and fourth, what are the different strategies you are adopting, especially in the non-South market, to promote your products? If you can explain.
So regarding, we don't give zone-wise EBITDA, but non-South EBITDA is about 4-5% lower than the Southern EBITDA, primarily because our scale in those markets are not as high as South, where our throughput is high. There are certain markets like Eastern markets and states like UP where our EBITDA is similar to South as well. So it's not like entire non-South EBITDA is, as a one block. There are certain individual branches where the EBITDA is closer to what is in South because of the throughput of the branch. In terms of e-commerce, is a journey we started about 2 years back. For a relevant category like, let us take like stabilizers, where we started first, it's between 6 to 8% of overall sales, growing very, very fast. Similar in the case of water heaters. So 6 to 8% is, our e-commerce sales, whereas actual sales in the market is close to 20% or 15 to 20% depending on the category. So we have still room to grow. There are certain categories which we have not taken e-commerce, and there are certain categories where e-commerce is not applicable. So that is why I said for relevant categories like water heaters and stabilizers, for us it's between 6 to 8% and growing fast. In terms of Kerala, I mentioned earlier also to someone else's question that Kerala's issue is that we have had a spike in COVID cases. So I think in a few weeks this should start subsiding down. Also, people will get more used to it. I mean, see, in the beginning when people see 10,000 cases per day or 7,000 cases per day, there is a lot of panic and fear. But after some time, probably people will get used to it, and that's what we're seeing in some of the other markets like Karnataka and all that. So we believe that consumer behavior also will slightly change. and people will become more, acceptable to, to the risk they're taking while getting out. Any other question I missed from you?
Sir, my last question is, what are the different strategies you are creating, means you are doing in the non-South market, if you can share, because there are, other strong players, especially in the northern side of a country. So to the likes of Havels and other players also. So what are the different approach you are adopting, something, competitive strategy you are adopting it, if you can share it?
Okay. Ram, you want to take this?
Yeah. So I think, fundamentally, we still have huge opportunity to improve our reach and availability of our product portfolio. Yeah. So that continues to remain our important and major focus. Yeah? And that is one of the fundamental pillars of driving growth. Yeah. The second pillar is, we continuously reevaluate our, product offerings, so that for competitiveness. Yeah. So fundamentally, we are looking at the value proposition of our portfolio. We kill models that are not, giving us the kind of traction. And, we develop and launch models in segments which are weighted bigger. And we try to adapt, our models to, offer a competitive value proposition in terms of feature functionality to the consumer, right? So I think expansion in distribution reach and, increasing or improving the addressability of our product portfolio, right? But these two remain our primary strategies for, what I would say, developing our growth, in the non-South. The third area that, we are focusing is on, making sure that our partners are profitable. Yeah. Yes. So we try to make sure that, the people with whom we do business with, right, they are able to enjoy good retention and, and therefore, right, they have, incentive and motivation to work with a brand like us. Yeah. That's the third piece that, we work with. Yeah? And the fourth piece, of course, is, we make sure that, in every way, right, we are a preferred partner for them. Done, sir. Thank you. Thanks a lot, sir, for your answering the question. Thank you.
Thank you very much. Next question is from the line of Akshay Bhor from Premji Invest. Please go ahead.
Hi team, thank you for the opportunity. My first question is more of a clarification. When I look at the GSK retail data for the month of June to August, it's actually gain share in the water heater segment. So just want to understand, this is retail market share should have been still fine, but you're not able to ship on the wholesale side, but that should get auto-corrected over a period of time. Is that safe to understand, and is that something which you picked up as well?
Mithun, shall I answer?
Yeah.
Basically, you see, I think the early market share gains would probably reflect the inventory which is sitting in the pipeline, right? Our issues, so us and like anybody else, right, all of us entered into the market with high inventory. So the months of May and the month of June, right, I think, and probably I would say, to some degree July, all of us had, good ability to service demand in the market. Okay. And, whatever, offtakes that you are talking about, right, would, connect with supplies which would have been made, prior to lockdown or in this period. Yeah. Our challenges in water heater have commenced, from August. I think, part of August and September it went into lockdown, and then again part of September and, October. We had this COVID issue, and the factory operations are significantly impacted. Yeah. So I think that has affected our ability to sell it because whatever inventory we had, our team has liquidated in the early part of this quarter. Yeah. And so we had significant challenges. Actually we had challenges starting July itself. Yeah, because I think we started our operations a bit late. So right through July, August, and September, and even current month as we speak, we are going to be having some availability issues in water heater.
Understood. That's fine. I think the next question I had is more to understand this market share shifts that have happened. Right? I think some of the players have done double-digit growth. you're probably flattish, but there are some who have lost a lot of share in this period. Just want to understand the smaller players or so-called unorganized. What is your expectation on when they would be able to come back? Are you already seeing they coming back in the market? And would you expect that going into, let's say, another couple of quarters down the line, the market share kind of goes back to the pre-COVID levels?
Mithun, I'll take it. Okay, yeah. So I think basically if you look at someone like us, right? I think some of our competitors actually got into activating their supply side even as early as first week of May, depending on where their manufacturing units were, right? End of first week of May. Someone like us, we were able to start off somewhere around middle of June, and we anticipated that by middle of August we will have supply challenges, and that has happened. So we had anticipated, because we are in a number of categories, and our supply chain large part of our supply chain is outsourced, and so therefore it is. And because we are not the strong leaders in those categories, the priority that we may be able to get from those vendors when they have labor availability issue and material availability issue, obviously we are going to have issues. So that was anticipated. Now that being the case for someone like us, right? I think it is fair to say that as you go down the value chain, you will find that these challenges will be continuing right through into, I would say, August, even the early part of September for smaller players. I think you can certainly I think September onwards, I think you can start to see them gradually coming back, right? And gaining traction, and maybe I think in the coming quarter I think things will ease out better for them. So I would sense maybe September quarter some more time, but certainly from coming quarter for some more time, but certainly from March quarter, right? Business will the competitive landscape, right, will fall back to the early era, right?
So one more point we have to understand is these smaller companies, one of the reasons why they were able to keep their cost low, provided they were making on their own, is they used to use migrant and informal labor. So there is no EFPSI, PFESI and all those kind of benefits for factory employees. So when you have such a small scale operation, and when this happened, all the laborers are left and they are not coming back because there is nothing for them to come back. At least for some time, because there is no loyalty for them to stay with this particular unit. So that also is one of the reasons why some of these units are hugely impacted. I'm talking about the small brands.
Just one thing, Mithun. So there is so while we are anecdotally hearing that people are coming back, and that's why I was saying that you might start to see their operations get to normalize in this quarter, and maybe supply starts to get more normal in the next quarter, which is like January, March. But on the other hand, I am reading that some of the other data that I am reading is reflecting that this scale of movement is not supported by some data. So we don't know at this stage how severe is the picture. But if we look at our vendor base, we find that in most cases now labor availability is back to about 80 to 90%, 80 to 85%. Yeah. So I think maybe for smaller units it will take a bit more time. Yeah. Probably after the festival period, maybe people may be more comfortable to come back.
Okay, thanks, Tim. All the best.
It's NREGA data, right? It is apparently reflecting that labor is still not moved to cities. So it's conflicting to what we are hearing. So thank you.
Thank you very much. Next question is from the line of Prashant Kutti from Sundaram Mutual Fund. Please go ahead.
Hi. Thank you for the opportunity, sir. The first question is on the second half. You said you were looking at maybe growth coming back. Any number you would like to put over here, because you're actually looking at almost a very weak Q3 also, which we had last time, and also Q4 obviously had a very the base was extremely weak. because like you highlighted that typically towards the fourth quarter, you'd want to build up inventory, and that was not able to happen into the trade. So is it fair to assume that one can actually assume as much as like a 15-20% kind of a top line growth for the second half of the year, given how the basis have been for us in the last year? Or do we have the confidence for that?
What we are feeling and what we are, forecasting at this point is that we will probably hit last year's revenue for the full year. Yeah.
You will hit last year's revenue for the full year.
Yeah, we should be able to hit last year's revenue for the full year. So that's what we are.
Yeah, which means you should be ideally able to do about a 20% number for the second half of the year.
Because we had almost 350-400 crore drop in March last year. So.
Yeah, correct. Sure. And second thing was a little more, a concern which has actually been happening in the past as well for you. You're speaking about the competitive intensity being much higher in the southern market, with the larger organized players also kind of getting aggressive. So has that kind of accentuated in this period when you've actually seen the larger organized players becoming more aggressive, and maybe V-Guard maybe losing out on that bit as well? Has there been any share shift on account of that?
Nitin, can I answer
that?
Yeah.
Yeah.
So a couple of things, right? So I just want to dial us back to about 3 years back, right? So, V-Guard had an outsourced model, and, that gave us a competitive advantage. Yeah. So once DeMon and GST, came in, what we found is, that, we had almost nearly 4%, competitive impact on the corporate revenues. Yeah. And what we have been busy over the last 3 years is to restore our competitiveness, and we have come to a point, not only we have restored our competitiveness, but also, relative competitiveness, but also we have improved our margins in this period, and, we are able to demonstrate consistently double digit, last year you saw we had crossed 7% EBITDA also. So I think, so that has been our focus, and that is where, a lot of work in V-Guard has been focused on the supply side, right? We have expanded our manufacturing footprint. Yeah, we have gone in for deep supply chain interventions, right? Which has helped us to, overcome this, competitiveness issue of about 4%, which we encountered the moment, we moved into GST. Because earlier, right, we used to, source from vendors, right, and, at vendor price, yeah. Whereas, the manufacturers were, probably, paying, excise on their, MRP, right? So I think, that was the context, and, so I think a bit of our energy has been focused in that direction. Yeah, that's first part. Second part is, till we are able to, institutionalize our interventions, right, the competitive disadvantage is going to remain. For example, right, our Sikkim factory for water heater, right, we should have actually, been able to commission. I mean, there was a phase 1 that we had done, but there is a phase 2 of the project which we should have commissioned by, March, April, which because of COVID got delayed into August, September, which is supposed to help us to insource the entire water heater production, right, from China into India. And, that helps us to have significant competitive advantage to compete with local, offerings. So I think, so to answer your question, right, 2 things. I think that, then there is another part also, which is that, the market is shifting towards, more aggressively towards organized retail and, e-commerce, right? And that is also requiring companies like us to adjust our, product portfolio and offerings here. That is something that requires us, some time to prepare in terms of creating, propositions for various channels. So I think, just to address the question on competitiveness, I think that, we have made a huge journey in the last 3-4 years. So I think, overcoming this challenge and also simultaneously improving our margin. The part of doing that also, we have obviously, repositioned our product post our, relaunch, to be, what I would say, to command, what I would say, better, realization, across our product offering and portfolio. So that's broadly about, how we have dealt with the competitive environment over the last 3 to 4 years. So coming to whether we have had dents in any of our categories in South, I would say, if you look at water heater, yes, this year we might see some ground in the last 2 months, but, we will come back now once our supply revives here. I think, different organizations are enjoying, different growth, yeah. And that's a function of, say, for example, we enjoy large market shares in South. Okay, but we enjoy lower market shares in non-South. So, if someone is growing aggressively in non-South, it may be hard for us to, reflect the same growth in South, because, we may already have in some categories, disproportionate market shares, right? So I wouldn't say, I think by and large, we have maintained market share across most categories. Yeah. By and large, that's what we have done. I think that, we could have better participated in organized retail and e-commerce, which, we have taken a more painful path to build a different approach to e-commerce, and, that is paying dividend to us, and, so that, we are able to build our e-commerce portfolio more profitably. Yeah. Because of the route and pathway that we have taken, and we are gaining, aggressive traction there. But, we are challenged with our ability to meet, the e-commerce requirements, right? And so our supply chain is still to fall in place to be able to, help our e-commerce team to meet the market demand. Yeah? So we are having some challenges there. Yeah? So I don't think we have lost ground anywhere. Yeah, I don't think we have lost ground anywhere.
Sure. And one last.
I think there has been a bit of pressure on Kerala because of this situation in Gulf, and before that monsoon and all that, right? So I think last couple of years, right, Kerala has had I think the last 4 years, there have been some significant challenges in Kerala, right? I think 2 years we had floods.
How much would be Kerala down, let's say, this quarter? I'm assuming Kerala is still not back to normal. How much would be Kerala back as of now in terms of, let's say, recovery as a market?
Sudarshan, about, I think this quarter, we are down some 17-18%.
Yeah, Kerala is down 18% this quarter.
Yeah. That is actually dragged us down. So whereas, if you look at Karnataka and, Andhra Pradesh, we are in double digits. Right? Similarly, southern Tamil Nadu is also dragged us down, right? Which is adjacent to Kerala, right? It's a kind of, common landmarks, yeah. So, that's the thing. And, that's why I said, Kerala has been on and off having challenges, and probably, would have, reflected, slower long-term growth in the last 3 years because of these natural calamities, and also, the issues in Gulf, right? So, but otherwise, we are fine. I don't think, we've lost ground. Yes, definitely, our growth may have moderated by 1 or 2%, but that is again because of, slower growth in this market. Yeah. Also, I think, we have to remember a significant shift in market has happened, particularly in the durables category to e-commerce and, organized retail. Yeah? Mm-hmm. And some of us are taking a bit more time to, align, right? So.
Sure. One last bit is on the margin side. So while you said that the margin trajectory will improve, just want to understand, because of this COVID period, you've actually seen a lot of these players actually pulling back a lot of the costs, some costs being sustainable, some being non-sustainable. Are we now, can we more comfortably say that the margin band, which used to be there in the past, that's now shifted upwards by maybe about a 50 to 100 basis points while we go forward, even in a normalized situation? Is that a fair assumption to make?
No, I think, what we are saying is, we would like to focus on gross margins rather than on EBITDA. Because I think gross margin will give you a fair picture, because below gross margin is what, you will manage, COVID period, you will cut costs and otherwise. I think, Sudarshan, we have I think have a 1.7 or 2.7% lower, I'm forgetting, I think 1.7% lower gross margin this quarter, right? Over same period last year.
Yeah.
And that is fundamentally coming from, lower capacity utilization of Sikkim factory, because these factories were closed, while, the operational costs were borne by the company. And significant, what I would say, the water heater makes, more than average margin because, compared to, because we also have wire, which is 20-25% of our revenue, which is at a lower gross margin, right? So I think, there is also some margin erosion because of mix, right? Having not sold, some amount of water heater and some amount of stabilizer. I think these two factors fundamentally explain our gross margin erosion. Otherwise, on gross margin terms, we are more or less there. I think there will be some cost pressure, which is building up as we speak, which you might probably see going forward, maybe in Q4 or something like that, for which I think companies will have to take some action in the coming months, mainly, arising out of, commodity pressures, So I think, some actions are underway and some actions will have to be initiated to neutralize that. But I think that's business as usual, companies have been doing this, over many years, so it's more a matter of, timing. So it's not a structural issue.
Thank you very much.
I wouldn't at this stage guide a gross margin improvement. Okay, I wouldn't say that because I think we still have the challenges on what I would say addressing the commodity thing which we have to act on.
Thank you. Next question is from the line of Mayank Bhandari from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, I just want to understand about the employee cost. In last quarter, we had seen 10% dip in the employee cost, whereas this quarter it is again a growth of about 10%. So have we not, I think we had held the increments. So how we should expect this going forward?
Mithun?
It's largely unchanged. There should not be any Q1 Q2 difference unless there is some...
No, let me answer that. When you compare this quarter to corresponding quarter last year, it is at ESOP write back difference. Last year, Q2 had a write back of 10 crore, which is a one-off benefit. So that's...
But in Q1, I think we had the salary increments and that impact has not come in this quarter. I mean, we have not restored it as of now.
When you adjust for that, the employee cost this quarter will be lower than the corresponding quarter of last year.
So he's asking about Q1. Q1 to Q2, there should not be much difference, right?
There is not too much.
Okay.
Yeah.
Okay. And sir, in terms of gross margins, you are highlighting that a company has always been following a strategy of killing the low margin SKUs and getting into more higher margin SKUs. So that kind of strategy, because now you are now you guided that there will not be any gross margin improvement, or maybe there will be minimal gross margin improvement. So what is your take on that? Like, have we not been following that strategy of killing low margin SKUs and getting into higher margin SKUs?
No, I think what we meant is, for the next couple of quarters, we may not see much of improvement because of the cost pressures. The natural improvement in gross margin because of more richer mix in both SKU and product, that will happen. So that we have said even before that, we would like to see some 0.5% improvement every year. But may not see that for next quarter is what we meant.
Okay.
Yeah. I was responding to his question of gross margin improvement for the coming 6 months, right? So I was just telling him that, there is the input cost increase which has to be addressed by companies, right? So, but the strategic portfolio improvement is something, which is something that, as a company, we will make happen in the coming period, right? As we have been doing over the years.
Okay. Thanks for the clarification.
Thank you very much. Next question is from the line of Ankur from Kasar Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, from a competitive landscape, when I think about the product basket, I see all the competitors, including V-Guard, they are launching all in the similar categories. So now how does one differentiate oneself when you are in the market? Like, let's say an electric kettle or a toaster or any of these grinder mixer, every single branded national player or even a local player is planning to launch such products, or it already has such products. So how are we differentiating ourselves while putting ourselves in the marketplace?
Ram, you want to take this?
Yeah. Two, three things, right? So, one is, we are working on design language for our product, right? So that, we are able to stand out as unique and differentiated. I think we have already done work on brand identity and packaging, and I think product design is one area that, we are working on so that, we are able to, impart a distinct, identity to our products, yeah. The other thing, yes, I think, initially, when we get into any category, right, our focus is going to be to understand the category, yeah. Our focus is to build capability, build competency, yeah? And as we understand that better, right, it gives us ability to experiment more with, newer features, functionality and additions, right? So this is a journey. So fundamentally, one area that, along with our brand relaunch, what we have tried to do, we have tried to focus on, see, one of our strengths is electronics. Yeah? I think that, that's an area that, among our immediate peers, we understand better, right? And, so when it comes to smart products, right, we have been first to market and we have tried to create differentiated offerings of smart products across various categories, right? Whether it was, inverter or, fan or water heater, right? So that's an example, yeah. But basically, we are working on consumer inciting based products, right? So I think, that's going to be our fundamental approach, yeah. So we are looking at consumer segments, we are looking at their needs and how best to fulfill their needs. So I think, you will see that, the way our products will evolve in terms of feature and functionality will try to address, consumer needs in a unique and differentiated way. So I think some part will be feature functionality, but there will also be, common design identity, which, we are progressively moving in our products.
But over a period of time, in every single category, let's say electronics and mobile. So mobile or refrigerator market or TV market, every market has seen some emerging leader or an emerging player which is trying to build a very strong brand identity around that particular that category. In this particular space, that is kitchen appliance and the small appliance space, where every single manufacturer or the brand is trying to first start with the outsourcing model and trying to switch to manufacturing. Don't you think that all these small changes, they are not appealing to the market? Because consistently I have been seeing it's just a distribution where we have a larger where we have a larger company, where a national player who will always try to
So my answer to that would be two, right? So first thing is, I think, when you look at a company and when you look at it business, not in the short term, but in the midterm, say over 3 years or over 5 years, look at the health of, what they are doing, right? So if their gross margins are good, right, and they are able to generate profitable growth, they are definitely creating a proposition which is, what I would say, ringing with the customer. Yeah? So I think, yes, a lot of people are trying to do a lot of things, right? We live in a democracy. Every company and every businessman has the right and opportunity to, attempt various things, right? And entry barrier is low because, in the past and, for some time now, but maybe, I don't know how long it will last with the tariff barriers coming up. I think access to technology and product and design is, not a big issue. Now, how is V-Guard different, right? So, what are we doing, right? So, we, of course, we are, what I would say, progressively, and today I think, 80 to 85% of our designs are owned by us, right? So, we have an R&D team, we have a design team, right? And, what I would say, we involve in creating, the offerings that we make, right? So, we own the design, we own the molds, yeah? Okay, we do, outsource because that's a, commercial decision. Outsourcing is a cheaper way for us, and it helps us to avoid making investment, right? So that is, one part of the story. So I think, what I would urge you is to look at, what route people are taking to get into certain businesses, right? Progressively over a period of time. Are they owning the designs? Are they owning the molds and assets? And are they involving in, defining the feature functionality of the product. Yeah, that's the first part. The second part is progressively, are they having capability, to embrace manufacturing, as a capability over a period of time, right? I think this is also a critical thing that, you will have to look at. Yeah. So I think, these will show, these two actions show you that these are companies which have deeper commitment. And I think finally, you need to see, the proof lies in the result, right? Are they able to do, for example, we may be doing a smaller kitchen appliance business compared to many players, yeah. But we have mostly been break even, or we've been making money even on a smaller franchise. So I think it's a question of are you able to position your product right in terms of price positioning, in terms of placing it with the right brands. And that's where your marketing and skills come in. Yeah. So yes, you're right. A lot of people will try a lot of things, and you cannot stop them. But I think you need to look at the results of what they are able to do, even on, let's say, in the initial stages with the kind of revenues that they do, and how they are able to position the product, and what kind of investment they are making, in terms of embracing the required capability to win the game over the long term. This is how I would suggest to you to discern between the various players who are trying various things in the market.
Sure. And sir, my second question is on the channel. So now, over a period of time, you have mentioned it several times during the call, that over the last 3-4 years, the channel via which we do our sales has shifted significantly. So now in that, I would think of V-Guard as, let's say, an emerging brand on a national scale. So let's say there are challenges of us being an emerging brand because it's a pull game rather than a push game. So now, how do you think about the channel sales, that is the digital and the modern retail, let's say 3-4 years down the line when you would have executed your strategy?
So I think, see, the fundamental thing is, firstly, right, you need to work towards fuel for growth. Yeah. Basically, you can't get into a battle, with an empty pocket, right? You need ammunition, yeah? So you need fuel for growth, yeah? And V-Guard has been working over the last 5 years or 6 years, right, to generate the fuel for growth, right? And this is the investment that has enabled us, right, to build our product portfolio, to invest in the talent, to invest in the right infrastructure, to invest in technology. Yeah, and in manufacturing assets, yeah, and that's how we have been able to do, and we have made this journey even as we make money. So I think, we will have to prioritize the journey the right way. Second thing is, we as a company have always made hard choices, yeah. So, if you look at something like e-com, we have chosen not to go the easy way, but we have chosen to go the harder way. And we believe that, this will pay us good dividends, over the longer term. I think, look, as far as e-com is concerned, it's a new game for everybody. And I think the organization which builds the understanding and capability will win the game. Yeah. Of course, different brands have different brand awareness and natural, what I would say as, natural pull. But I think it's possible for an emerging player to corner a higher share than current share, in these channels. Yeah. As far as, organized retail is concerned, I think, V-Guard has a long history of working with organized retail, and here I'm talking about fundamentally the regional retailers. Yeah, I think, it is one of the oldest and probably, brand with the longest engagement in this channel. Yeah, so Stabilizer has existed in the consumer durable channel with these, regional retailers long before many brands have been there. And, I've personally seen the kind of relationship and rapport that, V-Guard enjoys in this channel. So I think, entering RSS, with all these products and building, franchise for that will not be an issue. It's more a commercial decision about V-Guard deciding to invest, to build this channel, for the entire portfolio. Where it anyways, having a significant presence with, Stabilizer and water heater. It's a call, as I said, you have to organize the investment and resources, and then, you have to commit it towards this channel. So I think, this won't be a big issue. Modern retail, yes. Yeah, I think, modern retail, yes, that's a slower game and a more challenging game. But I think, we will have to bring the right kind of strategy and the right kind of capability behind to do this, and we have started working on this right over the last few years. Yeah.
Okay. And so just an extension of this question, because in the new channel, that is the digital sales and the modern retail, we have a very big competitor that is the private label themselves. So let's say I was just browsing through Amazon website, and they have their own fans, they have their own electrical appliances and all of that. So now, how do you think of it? You just think of them as another competitor in the game, or would you take the business very, very seriously? Because
I think under the law of our land, right? E-commerce players, they are basically a platform, right? Yeah.
Correct.
And it's the consumer who chooses what he wants to buy. Even today, as we speak in our country, right, 30-35% of the market is unorganized. Yeah. So there is organized market and there is unorganized market, right? So I think if you have own labels, I think that the category that will suffer will be unorganized sector rather than the organized players. Yeah. And second thing is So yes, competition is real. I think
they are controlling an important part of the channel, that is the consumer channel, the consumer interface, and also a channel where the highest margins are given by the manufacturers. So maybe on price or maybe on other aspects, like let's say the Amazon ads or the promotions, if they are able to do.
I think that's what I was saying, right? So we have taken a more difficult path to enter some of these places where, we would like to, start slow and the right way, right? But build our business with the right margin and right profitability, as V-Guard has always done as a company, across our various product categories and portfolios. Yeah? Even our smallest and the most recent entered categories, yeah, we don't lose money. Yeah? We break even or, we make some money. Yeah? So it's a matter of, commercial discipline about, how we run our business, and, we bring the same approach and we will bring the same approach. I think at the end of the day, you need to have STP GTM expertise, to build a, strong and sustainable franchise, in the consumer goods industry, right? So, and our space is a consumer goods space. So, I think, yes, there will be competition, but I think, companies which will build capabilities, on product, on go-to-market, yeah, and, consumer insight, these companies will always be able to grow their business and make healthy margins. Yeah.
Great, sir. Great. Thanks. All the best.
Yeah. Thanks.
Thank you very much. Next question is from Shirish Pardeshi from Centrum Broking. Please go ahead.
Hi, Mithun sir and Ram. Good evening. Thanks for the opportunity. I have few questions. More questions are on channel. So you started saying that non-South sales is picking up. Would you be able to specifically give an example which is the fastest state in terms of growth, and what are the pain points you guys are encountering in that state?
See, it's difficult to say because when we started this year in April, the largest impact of COVID was, felt in the largest cities of Bombay and Delhi, and then Pune and all that. And in the first few months of post-lockdown, eastern markets and southern markets started to do well. But later on, the cases spread. So I think this is an evolving situation. I don't think we can say that a state will grow faster than another state. But generally, we can say that, where V-Guard has had success, we have done well in the eastern markets, over the last 5 to 7 years. And we have done well in the UP market, which is Uttar Pradesh, market. So these are the markets where we have seen good success. But it doesn't mean that we have failed elsewhere, but these are the markets that have grown fast. The COVID-related rebound is an evolving thing. Today, for example, eastern markets were the first ones to do well post-lockdown, but then later on the entire state of Bihar went for a 1-month lockdown and completely decimated the numbers. So it's very difficult to predict what each minister is planning to do this month or next month. So it is going to be an evolving situation. probably, they can't put a, finger on, a particular state that is, doing exceedingly well. Because 1 month they will do well and the next month it will go down.
Okay. My follow-up on that, you mentioned that there is a lot of consumer interaction happening through the organized trade, and few of my friends also raised the private label which is existing on e-commerce. So if alternate channel is the way forward and it's slowly picking up, but it's the growth rate which are fastest, so would you be able to quantify what efforts we are trying to do to get our presence in organized trade, maybe in terms of what are the growth rates we are estimating and what is the contribution which you are having now and maybe 3 years from now you are targeting to achieve?
Yeah, Ram, you want to take this?
Yeah. No, I think, I think this is a phenomenon not unique to us. It is across categories, right? I think, in fact, I think, companies in our space have some advantages, right? So the electrical channel, most of the players in our space, right, have a portfolio which is overlapping electrical as well as consumer durable, right? While the consumer durable categories are more strongly evolving towards, organized retail, what I would say, the electrical categories, still remain traditional and, for now, because of the method of, purchase and the path to purchase, right, it pretty much is likely to be remaining, that way at least for the coming 5 to 10 years. Yeah. I think, firstly, therefore, I think, this is a lesser challenge than, what is, thought out right now. Yeah. As for these companies, although maybe for certain segments or sectors, in the portfolio, the pressure will be more felt. That's the first thing. The second thing is, as far as, as far as emerging channel is concerned, right? So what's going to be our strategy? Obviously, we would like to, index, our revenues, right, to come, to give a higher share compared to share that we have in the traditional market, right? But this is a slower journey and, it takes its own time because, I think the main challenge for us is two, right? One is, how do we manage a conflict with traditional retail, right? So I think that's one key challenge here. And second key challenge is, we need to build a whole set of capabilities, which are, a bit different from, what we do with traditional trade, right? Be it content, be it, what I would say, supply chain or, be it, digital, yeah. So I think a whole set of new capabilities have to be built, and that's the second part of it. Yeah. The third part of it is how you design the business model, right? So that some of you were expressing concern, whether it will be margin diluting, right? I think it's a question of how you design the business model, right, and how you design the right value proposition so that your partner and you both make money. Yeah. So I think that's the challenge, right? And those that sit down to address it, will obviously from a growth point of view take a bit more time compared to those who jump in head on and try to fix it as they go. So there are different approaches to this subject, right? So, but I think at the end of the day, I think it is another channel. Yeah, it is another channel and another way for consumers to buy what they want to buy. Yeah. So I think, it's not anything more than that. Yeah. I think, the only thing is, each pipe, right, whether it is e-commerce, whether it is modern retail, whether it's regional specialty, whether it's a direct dealer or a distributor, right, each pipe has different costs, right, and it has a different, path to the consumer, right. And the challenge lies in designing, product and, what I would say, the commercial parameters, right, so that, it makes economical sense, right, for the company and also for the retailer, right. So that's the challenge and, that requires to be solved and that takes a bit more time. Yeah.
Would you be able to quantify what kind of contribution coming from this emerging channel?
So, for example, I think, if you look at, e-commerce, right, I think e-commerce, we would be probably, about 3 to 4% of, I think about 3% of company revenue will come from e-commerce this year, right? And, if you look at the concerned categories, because some of the categories like wires or switches or switchgear are not on e-commerce, or pumps, yeah? So if you, leave them out, then probably, this number will look more like 5 to 6%. Yeah? So I think about 5% you can say this year, we will get out of it.
But that will be largely durable.
Yeah, that's largely durables, right? So, and, yes, we would like to grow and, we would like to make sure that, we index e-commerce, stronger than, our open market shares, right? So that will be our objective. So we would like to grow faster. Yeah? But that requires, we have a lot of work to do to get there. Okay? And which is our focus for the coming years. Yeah?
Okay. Just last one question. If you can comment upon our thoughts on CSD channel and exports in near medium term, what kind of numbers?
I think we are not in CSD presently. Yeah, we are not in CSD presently.
Yeah.
Okay. See, I think fundamentally, V-Guard has primarily been focusing on what I would say traditional retail. Yeah. And we are expanding our focus. We have expanded our focus to what I would say as e-commerce and modern trade. Within that, we have always been present in the regional specialty, and we have a very decent share of business coming close to 10-11% coming from that channel. So I think we are well indexed there. A bit lower, but that's something that we can always play with. In South, it will be quite high. In non-South, we have room to improve. When we come to exports, exports is a small part of our portfolio, and we are mainly focusing with export in adjacent geographies, right? Like in our region, right? Like Sri Lanka or Nepal or Bangladesh or something like that. So that's our focus. So we pretty much want to primarily focus on India and build our business and portfolio in India. We are not in CSD presently, and yes, we would like to get there, but getting into it, they have their own procedures, and it takes some time. Yeah.
Okay. All right. And thank you, and all the best.
Yeah.
Thank you very much, ladies and gentlemen. That was the last question for today. I will now hand the conference over to the management for closing remarks.
Thank you, Q2FY and Manoj, for hosting this call, and thank you everyone for participating in our conference call. Thank you.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.